Hello and welcome to the third instalment of our Investment Insight series, Magellan Minutes. We aim to bring investors relevant, timely and thought-provoking investment insights, all in around 10 minutes. It's been great to see the positive feedback we've received from the series since we launched about a year ago. Well, a lot has happened since December, with the vaccine rollout now very much underway globally, and also the results that we're seeing from the stimulus packages washing through the system. From ESG to infrastructure, luxury to financials, we'll be discussing issues and developments in the sectors and the stocks in our global portfolios. My name is Jennifer Herbert. I'm Key Account Manager at Magellan, and today I'll be speaking with Vihari Ross. Vihari is our Head of Research, Portfolio Manager, and also the head of the MFG Core Series. Today we'll be discussing the performance of the luxury goods sector, how the sector is embracing technology, and whether inflation and rising interest rates is of concern. Vihari, thank you for joining us.
Thanks, Jen.
The challenges of the last 15 months have been severe for many industries around the world, but luxury has been a significant beneficiary. In fact, Bernard Arnault, who is the chief executive of LVMH, is now the wealthiest man in the world. How is it that luxury has performed so well in a global pandemic? Isn't that counterintuitive?
Well, it would seem counterintuitive at the surface. I think, there's this phenomenon called the lipstick index, which is one of these funny things where, affordable luxuries have traditionally done really well in economic downturns. Lipstick did well 2 recessions ago, nail polish did well in the GFC, this time it was skincare. But the real difference this time around is with all the stimulus that was thrown at consumers, in the US in particular, but all around the world, rising stock markets created a real wealth effect for a lot of the workers who were able to continue on, in their work lives from home. And that brought about a lot of increased spending, in this sort of K shape versus a traditional downturn would see. So you saw huge amounts of spending on people's homes, but also in the luxury space. So we saw skincare sales, double-digit growth in things like La Mer and Estee Lauder type luxury brands. You also saw the fashion and leather goods business, even as recently as the last quarter for LVMH, increasing by almost 40% on 2019 figures. So you've seen this real upswing in spending for luxury, and it really has been a function of those additional factors that governments have employed to keep economies afloat.
But didn't the Chinese spend more when they're actually travelling?
Absolutely, Jen. So pre-pandemic, 2/3 of all Chinese luxury spending happened when they were travelling overseas. Now that has significantly repatriated, to the mainland. They're spending all of that plus more in their home country. So that was up more than 30%, according to Estee Lauder. The other big area that it's happened for them is through the development of the province of Hainan Island. It's considered the Hawaii of the East, and so it's been a big tourist destination for Chinese travellers for quite some time. There was more than 60 million people that travelled there in 2020, and their spending increased, duty-free spending, by 130%. While they were there, and that's because the CCP has really pushed that as a place to do shopping. They've tripled the duty-free limits over the last year, and they're also expecting those figures to triple again over the next 3 to 5 years. So it's an area of focus for the Chinese government, and it's really helped support luxury sales, in what was a very difficult year.
And you mentioned e-commerce. How important has e-commerce been in the growth?
Yeah, e-commerce has really been a, mountain coming to Muhammad type moment for luxury. They were, it's an old school industry. It's all about heritage and design and, French history. But they've really had to embrace online and e-commerce, and what you've seen is, more than 100% growth in e-commerce. Tmall continues to be very important for companies like Estee Lauder. 30% of their Chinese sales are happening through Tmall. LVMH has very strong own brand based e-commerce in China as well. And of course, it's very much been relevant in the Western markets. When stores were completely closed, of course, 100% of sales were coming from e-commerce. So that's something that they've really realised is an important way for them to engage with their customers and create and build their brand as well as driving sales. So it's really been a pivotal moment for luxury in terms of coming to the party on e-commerce.
Are there other ways in which the luxury industry is embracing technology?
Absolutely. Luxury has really come a long way in terms of embracing technology. One of the really big things they've started doing is live streaming. In China in particular, they think that 40% of purchases are coming from live streaming based sources now. 430 million Chinese viewed live streams for shopping purposes in the last year. Gaming has been a really interesting one as well. Louis Vuitton has designed costumes and avatars for Honor of Kings, which is Tencent's biggest game in China, and also for League of Legends, which is a game that's more on the Western side. And you've also had things like, if there's a rapper doing like a live concert within a game like Fortnite, Travis Scott, who's one of these famous rappers, did a concert that 12 million people viewed live, and that was all branded, in terms of the clothing he wore and things like that as well. And it's a really interesting way that companies are going to where the consumers are. And of course, Gen Z and millennials are really important to luxury. They're going to be 50% of spend, in the next 5 to 10 years. We've also got, things like blockchain. That's not only used for Bitcoin, it's also something that the luxury industry is embracing. They've created a consortium, and this is a series of companies where brand heritage is important. So it enables them to use that tech to understand and explain the heritage, the authenticity of their sourcing, and also avoid things like counterfeits and things like that as well, because of the authenticity that comes with blockchain. So that's something that I think is really going to lead to an explosion in, control of that secondary market and secondhand goods within the luxury space as well. So quite a few interesting things they've started getting involved in and dabbling in to really meet the customer where they are and where they want to spend time online.
Both LVMH and also Estee Lauder's share prices have risen significantly on the back of these tailwinds that we've just discussed. What do you think of their current valuations?
Yeah, so you're quite right. Like, since the lows in March of last year, both Estee and LVMH have increased by more than 100% in terms of their share price. Their PEs have increased significantly as well. And that has been supported by underlying fundamentals. You have seen this incredibly strong growth, and those tailwinds, haven't been thrown, the baby hasn't been thrown out with the bathwater. They still exist today. On a relative basis, LVMH definitely still looks cheaper than Estee Lauder does at the moment. However, both companies, given those long-term structural tailwinds, are reasonably priced still.
So, Vihari, does the talk about a rise in inflation and potentially interest rates, does that concern you?
So when it comes to the luxury space, not significantly so. These are businesses that are highly profitable. They have very high gross margins. They also have significant pricing power that's been demonstrated over decades. The thing about luxury is that they are long duration growth stories, and there has been a significant re-rating of long duration growth through this lower interest rate cycle. So you would expect potentially some short-term derating risk if inflation worries came to the fore in a more material way. But importantly, at the moment, inflation doesn't appear to be a long-term structural phenomenon. So, at Magellan, we're looking to invest with a long-term lens, and we can look through that. And they certainly are, far better positioned from that valuation perspective than some of those more bond-like staples within the consumer space as well.
Vihari, thank you for your insights today.
Thanks for having me, Jen.
And thank you for watching. If you have any questions, please don't hesitate to reach out to the Magellan distribution team, and please feel free to share this update with clients and colleagues as you see fit. Thank you.